Is buying tax liens profitable? Well, you're going to be surprised. This episode is going to answer that question, and you're going to see that this could be a big money thing for you. Now, you're going to be surprised, you're going to be delighted to see, number one, what a safe investment this is, and also that anyone can buy tax lien certificates. They're big, they're small, they're all sizes. You can start out with $50. So if you're starting out right now and you're buried in debt, well, folks, stay with me, because this is the program that you've been looking for. All right, so if you got a lot of debt, I'm going to show you not only how to get out of debt, but I'm going to show you there's an opportunity here in the future. Now, my name is Ted Thomas. I've been involved in tax liens and tax deeds for over 30 years, okay? Now, what the county does, they transform a tax lien into a tax lien certificate, and then they sell the certificate. Anybody can buy them. They start for $50, and they're always sold at a public auction. That means anybody can buy them. Now, why are they selling those certificates? Because the county needs money. So when you buy the certificate, you help everybody. Who do you help? You help everyone. Because first of all, the county gets the money so they can pay the police, the fire department, pay for the hospital, fix the roads. Okay, that's number one. Number two, you allow the homeowner to stay in the property, because when you buy a tax lien, you don't get the property. And number three, when you get paid, you're going to make big money, and I'll cover that big money over the next few minutes. So I'm going to give you a brief background on tax lien certificates, and I'm going to show you how the government, the legislature, starts at the top, then they push it down to the county and the municipal level, and they're going to manage this whole process. But they have to collect taxes. Now, I don't make the rules. I'm just going to teach you how to take honorable and ethical advantage of these rules. So what are we talking about? We're talking about, is buying tax liens profitable? Folks, this is a big-time profitable business. Okay, so all property that's in the state is taxable. All right, who makes that rule? Well, the legislature makes the rule. The federal government said anybody can own property. So the local states say, all right, if you're going to own property, we're going to allow you to own it, but you got to pay your fair share of the taxes. Not a lot of money, but property taxes generally run about 1%. But you have to pay your share. Why? So the county has money to run the government office. Not a big problem, but if you don't pay the taxes, the government would actually collapse. So they don't let that happen. So what basically happens is the legislature says, all right, the treasurer, the tax collector, the assessor, one of those people at the county is going to have to levy the tax. Then they're going to have to try to collect the tax. And if they can't collect the tax, in half the states, they'll issue a tax lien certificate. The other half, they'll issue a tax deed. All right, so is buying tax liens profitable? It's big time profitable, and you just have to learn how to do it. Now, most taxes, as I said, are only 1%, but values are 100,000, 200,000, millions, whatever, but 1% of that's always going to be due. So what question am I answering in this episode? Is buying tax lien certificates profitable? Yes. Okay, so if the property owner doesn't pay, what the county could do is they could take the people off the property. Okay, those are the tax deed states, but right now we're talking about tax lien states. So tax lien states, they're very benevolent. They don't take the people off the property. In other words, the tax collector doesn't show up and tow them off or tow the people out of the property. So the people stay in the property, okay? But they do issue a notice of default. That becomes a tax lien certificate. You can buy those at auction. You could earn 16, 18, 24, all the way up to 36% interest on one of those tax liens. All right, now, across the United States, half of the states are selling tax liens. The other half of the states are selling tax deeds. Okay, now those are approximate numbers, but you're getting the idea. So there's going to be plenty for everyone. They're never going to run out. Now, each state has limits on the tax lien because they don't throw the property owner out. So when you buy a tax lien, you're buying an income vehicle. The owner stays on the property. They're probably there because they lost their job or maybe COVID got them or something happened to them. And generally speaking, 95% of those people will pay the tax. But when you buy the tax certificate, you now control the property. So according to the tax collector and according to the county records, 95% of all these tax liens will be paid. So now if you buy that tax certificate, 95% you're going to get paid. Now if you don't get paid, the legislature calls for the property to be transferred to you. Now, that's the law in all 50 states. All right, so let's think about this. 95% of the people are going to pay their taxes, okay? All right, now if they're going to pay their taxes, that's a good deal for you. You're going to make 16, 18, 24%. That's a good deal. Now, these auctions could be a tax lien auction, or in this case, you're looking at a tax deed auction where they're actually selling the property. All right, so you're getting the idea. So tax lien certificates pay a maximum in Arizona of 16, in Florida up to 24% in Iowa, and in Illinois up to 36%. So these certificates are powerful. You can make yourself a ton of money with these things. All right, now the owner of the tax lien certificate is the beneficiary, but the property owner is also a beneficiary because they don't get kicked off the property. They're allowed to stay there. So the tax lien buyer now is going to get a rate of return. The property owner is going to get to stay in the property, and overall, the county is going to get paid money. So you're getting the idea. All right, so this is a beneficial for everybody in the community if there's tax liens. Now, the opposite is tax deeds. Now, those states, there's no benefit to that property owner. If they don't pay, wham, they're going to move them off the property, and they're going to put the property up for auction at just the back taxes. But today we're talking about, is buying tax liens profitable? Well, it definitely is profitable. And this is a secure investment. What's a secure investment? It means when you buy this certificate, it attaches to the property. All right, so if you don't get paid, you get the property. Let me say it again. If you don't get paid, you get the property, and you get the property without a mortgage. The mortgage is wiped out. The mortgage is wiped out. The treasurer has been given an authorization and a mandate from the legislature to collect taxes. If they can't collect taxes, they move the people off the property and they sell it. And when they sell it, the treasurer can go to the county records, the public records, and wipe out, X out the mortgage. Now, folks, I don't make the rules. I'm telling you the system. The system is if you don't get paid, you're going to get the property without a mortgage. Now, if you could wave hand it back to me and wave like this to Ted, you'd say, yes, that's what I want. I want a property without a mortgage. That's what happens if you get a tax lien certificate and they don't pay. Folks, I didn't make the rules. Everything I'm telling you is 200 years old. I did not invent this. Okay, now property owners that go into default, there's all kinds of reason for it. So don't worry about what the reason is. Just know if it's a tax lien certificate you're buying, the people stay on the property. You do not get the property until the time limit runs out. And I'm not going to cover that now. But the point is, all tax liens will have a minimum time. Sometime, someplace it might be 6 months, it might be 2 years, whatever. It's not forever. They can stay on the property. If they don't pay the tax within the time limits I just mentioned, well, guess what? You're going to get that property, and you're going to get it without a mortgage. Think about that. The owner has forfeited their right to have that property by not paying taxes. So the legislature said, number one, you have to pay taxes. Number two, if you don't pay taxes, you forfeit your property. That's the name of the game. Doesn't matter whether it's tax liens or it's tax deeds. Now, I don't make the rules. The legislature makes the rules, and then the legislature passes it down to the county, to the treasurer, to the tax collector, to the assessor, board of supervisors, county commissioners. Those are the people that run the county, all right? They're the ones that are going to have that default notice. When the default notice comes out, that's over. That means that property is going to tax auction, either a tax lien or a tax deed. All right, these are not unusual auctions. There's going to be 5,000 of these auctions every single year. Now think about what I said, 5,000 auctions. So what's the question today? Is buying tax liens profitable? You better believe it's profitable because you can earn 16, 18, 24, all the way up to 36% interest on a tax certificate. So let me demonstrate that now. My friend Dave called me on the phone. He said, Ted, I just got $2,000 I put in the bank. And I said, okay, great. What are you going to do with that? He said, I'm going to leave it in the bank, and I'm just going to roll it over. Every year when the CD comes due, I'm going to keep rolling it over. I said, why are you doing that? He said, well, I'm 35 now. I want to retire when I'm 55. I said, okay, I got it. All right, so you're just going to leave it there. I said, what's it going to be worth? What's your $2,000 going to be worth in that period of time? He said, well, I'm not sure. I said, well, do you know the interest rate? And he said, yeah, 3.75. I kind of scratched my head. I said, wait a minute. Today interest rates are 1%. He said, I've got a special deal at the bank. I said, okay, let me see if I got it right. 2,000 in the bank, 3.75, right. And you're going to leave it there and just keep rolling it over. I said, okay, what's it going to be worth? He said, I don't know. I said, what do you mean you don't know? I said, the banks are paying 1% and you're getting 3.75. What's it going to be worth? He said, I don't know. So what I did is I took a calculator, just my cell phone, and I put in at $2,000, 3.75. I figured out 1 year, and then I just redid it 19 more times to get to 20 years. And there it is, folks. His $2,000 is going to be worth $4,129. Folks, he going to retire on 41? Is not that would be a dream for what? It's never going to happen. Take a guess. The way things going might be that kind of money just in a few years. All right. So I said to him, well, I don't know if you're going to do very good with that. He said, well, what should I do? I said, wait a minute. I'm not a CPA. I'm not a financial planner. I'm not an attorney. I'm none of those things. I'm just a prepared tax lien and deed investor and an author and publisher. That's what I am. He said, well, can I do this in Arizona where I live? I said, yes. He said, how much does Arizona pay? I said, 16%, just like I told you a minute ago, 16%. He said, how much would I have if I did 16%? I said, I don't know. I'll do it real quick. I put 16%, 2,000. I did it 19 more times. Well, folks, guess what? It's going to be worth a bundle of dough. So instead of being $4,100, it's going to be a lot higher than that. What's it going to be? Well, it's going to be up in the range of $30,000. Now, how does that work out for you? You can get $2,000 and make it into 30, or you can get $2,000 and make it into 4129. It's up to you. All right, so our tax lien certificates profitable, you bet your post toasties there. These are real profitable. Now, earlier, I mentioned that Arizona pays 24%. That means that if he put his $2,000 and he earned 24%, we could figure out the first year. We could do it 20 more times. Would you like to see what that's going to be? Well, there's the number. It's $120,000. Now, I don't make the rules. This has been the rule for 200 years. People don't pay their tax. You can buy the tax liens. You can put that money in there, and you can roll it over and roll it over and roll it over. Folks, $120,000. Read the bottom of the slide. Now you can see what you've been missing by not knowing about tax liens. And in other videos, I'm going to talk about tax deeds. But as I leave, I want to remind you, if you go below me and you can get yourself a free gift from Ted Thomas, I have two things I want to make sure that you don't do. If you go to auctions, number one mistake people make is they don't look at the property. If you don't look at the property, don't buy it. It might be next to a chicken farm. It might be next to a factory. It might have something wrong with it, like they had a windstorm or there was a fire. So you don't want to buy a property unless you've seen it. Secondly, if you're going to go to the auction, you need to have looked at the property, but the second thing you need is what are you going to sell it for? Don't just buy and hope that you're going to have enough money to sell it. What you're going to do is you're going to get bidding to win, to win, to win. You might win and have spent too much money. So those are the two big mistakes. I'm Ted Thomas. Just go below me and there's a free gift.